Sorry. You think what was I saying the other time? I started recording. Um what was I saying? Sorry.
Those are impatient.
Yeah, I was talking about patient, like you might think you have patient, but what I'm talking about is kind of related to top-down analysis. We are talking of top-down analysis, right? So you might think you have patient, but the truth there is that you don't really have that patient you think you have. There is this saying I saw from a book. Can't really remember the book though, but I think it's from this guy. How to get from where you are to where you want to be, something like that. It was, I think I once posted, we're talking about when something is easy and when something is simple. It is not the same thing. Actually, you might think maybe they are similar words, but no, they are not. When they say something is simple and something is easy, top-down analysis it shouldn't be complicated. It should be something very simple, but it is not easy because it is not everybody that can do it. You might think you know about top-down analysis, but you have been doing a different thing all this while. So you we make something that is easy simple. Trading is simple, but it's not easy. It is not easy. That's just the truth. Trading is very simple. You can register with a broker, deposit. In fact, it is so simple these days that you can convert one currency, one currency to USD and then deposit. You can even deposit Naira, your local currency, you can deposit them. Go to MT5, click on any pair, you can click buy, you can click sell. There was a challenge that this guy at that time that was like, just deposit any amount you have and then randomly click buy or sell on any pair and see if you can make money, like without analyzing the chart, just do it. And some people came out profitable, while some people blew the money, while some people make money. I mean, just randomly do it. So that shows you that this is very simple, like, but it is not easy. Oh my God. If it is easy, I used to tell myself, if it is easy, then everybody will be making money. Don't you think so? Everybody is going to be a trader. Everybody is going to know about forex trading. Everybody is going to know about crypto, and everybody will be a millionaire. Very simple, right? So that is just to let you understand that you have to pay attention to this. This is not a joke. Trading is not a joke. Trading is not something you just wake up at any time. You see all those things you see on social media, they work to get there. You are not there yet. You want to get there. So before they get there, do you think that was how they were living their life? No. So you have to learn how to pay attention. Serious attention. You don't just go to weekly, jump to daily, jump to 1 hour, jump to 15 minutes, and then some people, then I used to tell you guys that when I talk, I'm talking from experience because these are things I do before too. I will just go from weekly to daily, just 1 minute. Yeah, it's true that this thing shouldn't take time, but some people don't know how to pay attention to things. They don't know how to do it. It is not their fault. Probably that is how they are. Same thing with this patient of a thing. It is not everybody that will be as patient. Some people are extremely patient. Some people little bit patient. Some people totally impatient. So I'm going to show you how I do it. It takes serious patience. Sometimes I might do top-down analysis on a pair. When I was trading for pairs when I was trading, for those that follow me, then I used to trade Euro USD, GBP USD, Euro JPY, and GBP JPY. I can show you guys. Okay, let me open my other code. I'm going to show you guys how I even do it. So this is not something that you want to hide. No, absolutely no. There's nothing there to hide. I will show everything. and let you understand that it is not something you can just rush over. You have to take your time to do your top-down analysis. I used to sacrifice the whole of Monday London session to do a top-down analysis because I don't trade Monday London session. So I use the whole of Monday morning from 7 a.m. to like 12 p.m. to do top-down analysis on my pairs. That is to show you the amount of time I spend on the chart. Sometimes I go back to what happened last week, what happened 2 weeks ago. I take note of everything down to the candlestick. How did last week candlestick close? How did yesterday candlestick close is very, some people don't know how to use it. It is very important. The open and the close. I will say, most of you I've seen, sometimes when I drop a chart, like I'm expecting this week candlestick to close like an engulfing candlestick, like the way Euro JPY is on the weekly time frame. I don't see reason for me to start selling, even though I'm having this bearish, how will I put it? I want to sell it for those trading Euro JPY, JPY. I think I have it. Yeah, something. Okay, now even though I'm still expecting a kind of pullback, right? The pullback might not come now, but I have seen it from the weekly time frame, from the daily time frame, sorry, that this candlestick here, it is obvious that it is going to close as an engulfing candlestick. The reason is that look at the time that price started pushing to the upside. When price came to mitigate, okay. When price came to mitigate here, right? Yesterday in the afternoon, like this, if you really, this is like a zone of buy side liquidity, sorry. So now, even though I'm expecting to like, maybe I want to sell, I'm teaching you based on how I trade. So there are some things that I don't really see the charts that way, because to be honest, everybody cannot trade the same way. I've always said this before. Even though you all have same mentor. 100 of you here, if you have one person as your mentor, and your mentor tell you, based on what I have taught you guys, go and analyze CPP USD. Some people will see buy, some people will see sell, some people will see nothing. That is just everybody will not trade the same way. Because at the end of the day, your understanding, what you understand before, this is it. Some people might pay for a mentorship this month, and they'll be like, it is the mentorship that changed their life, or however they put it. But the truth there is that those basic knowledge you have when you started learning how to trade, those basic knowledge like candlestick, all those morning star, evening star, all of those basic knowledge, those are the things you will even join together that will make you that good analyst that you are as of that time that you pay for that mentorship. So that mentorship might just be something to open your mind to something else. I used to say this when some people even come to me for mentorship. I used to say this, that some people, their problem might not even be technical, might not be technical analysis, might just be something as simple as risk management. But it is not easy, but it is simple, very simple. Just risk 1% or risk 0.5% per trade. It is simple, right? But some people, when they see that trade, the grade will come in. That is when they will be like, oh, I am sure of this trade. It's swept liquidity, broad structure, inducement, everything. Let me risk 2%. Right? At the end of the day, the trade will go against them and they lose that 2%. Meanwhile, their rule is states that they should risk just 1%. And at the end of the day, when price now give them another entry, they will now lose that confidence to take that trade because they have lost 2% on this. And when that new entry that price give them, it will not go in their direction. They will not start blaming themselves. Some there are some petty things that used to happen that makes a lot of people unprofitable. I mean, that is not even related to technical. So, like as I was saying, there are some things that I don't really count. Like me personally, I used to tell my students, you can never see me doing something like this on a chart. I've seen people do this a lot of time. Yeah, I know that you are expecting price to move from internal to external, but I have said is that price will not just, I mean, what of all of this though? Like, don't you know that all this, like you are seeing, like even though there is news, all of this, there's going to be a reaction one way or the other. Some of those reactions will even cause a deeper pullback that it will even take you out of break even. And then, however, if price wants to continue selling, and price will continue selling to wherever price wants to sell to. So looking at this daily candlestick now, look at this. This is Euro JPY. We have a supply from here, very clean order block. This was the last buy candlestick. The red one is my buy candlestick. This was the last buy candlestick before the downward move that broke this structure. This is a structure from the lower time frame, and as well it even broke this. Look at this other block too from here. There was a little bit of reaction from there before it failed and price started going. So when I saw this, look at the way price, see where price is coming from. See, price is coming from the body of this candlestick. We took out Tuesday low on Wednesday. So from this move now, this is going to be the confirmed low of the week. Look at how Thursday close. What do you see here? Let me use a bar replay. What do you see? Let me cut it out. Look at yesterday candlestick. What do we have? We have a doji candlestick on Wednesday, another doji on Thursday. And what do we have? We have a swing low. A low to the left, a middle low, and a low to the right. And this Wednesday, price tap into the body of this candlestick. You see this body of this candlestick? It is the demand that took out the supply. Like as I was saying, I said there was a supply here. This is another block. This was the last buy candlestick before this downward move. So there is another block here. So that other block, you can see when price get there, we had reactions. We had the first tap, second tap, before we took it out. So this is the demand that took out the supply. Price came there on Wednesday, we tap into it. Even though I'm expecting like a pullback, the pullback is not going to happen now. Now, I am not going to now throw out my range. So I have already seen it that the buy might still continue on Thursday stroke Friday. The reason is because of this range. You can see, so we still need to retest deeper premium. Though we have tapped into the premium, but we still need to retest deeper premium. So in this kind of scenario, I want to continue the buy. And if I'm not able to get into a buy, no problem. I will just allow price to do whatever price wants to do. If price is going to sell, so many things that I don't really stress myself, like trying to look for the supply that price is going to sell from. Trying to look for the supply that price is going to sell from and be doing something like this. I don't usually stress myself over that. I used to say this, that if price is ready to sell, you will know. If price, look at when Euro JPY started selling from here. Look at when Euro JPY started buying from here. We started buying from this low. I took a buy from here. I was expecting this side to be taken. Price did not get to my TP. We had a reversal back. We didn't take out this low. So even though I was price did not get to my TP, okay, we have taken out internal range. We are coming for the external. Now, the external price did not get there. Why? Okay, we continue buying. Eventually, we took out this high again, right? I took the buy from here to again, from here, and then we eventually hit the target, so we took out this high. Now, we continue buying. We broke above here. First break of structure, we broke above here. Second break of structure. Now, what is this? This is a sweep of liquidity, not a break of structure. Then we broke structure to the downside. Now, look at the kind of price action price is giving here. My first sell was coming from here. I was on target. The second sell, I think I even showed Telegram. The second sell was from somewhere around here, and I was target. When price started selling, I knew that it's ready for price to sell. I did not go and do something like this and be doing this. I mean, I won't do this, right? Now, you'll be like, okay, but this workout, it actually do work. But me, I don't want to do this because it is not sustainable. There is higher possibility, there is higher probability of price to continue buying to the upside. What do you always want to wait for? Always wait for intent in price. I always talk about intent in price. Price intent. The problem is that you are not patient for that intent to come to light, like to be clear that yeah, it is ready for price to sell. It is ready for price to buy. Even all of this little price action that is happening here, all of this pullback here, yeah, I might eventually take in some trade from here, but I didn't get into any trade at all from here. But I might eventually take in because like if I'm paying attention, because most of my attention now goes to US 30 and NAS 100. But even though I am trading this consistently and I'm able to get in a buy from here, the thing there is that this buy you are seeing here might just be a pullback. I mean, this could just be a push, a pullback, and we can still continue to the downside. That is to show you that when you start this buy that happened from here, that is happening here, there is no clear intent of buy yet. I mean, there is no clear intent. The only time that we started having a clear intent of buy is when a manipulation happened. That this is when a manipulation, like a clear manipulation, I'm not talking of just a random manipulation, like a very clear manipulation happens, then when we start buying again, you see the new structure is what I want to trade. The first structure is going to come in form of a pullback the first time. This is it. When price sell, what do we expect? A pullback. Now, this pullback, you can get into your buy from there because the pullback is not going to come in form of a straight line. Let me draw like two. So we broke structure. So we are going to expect a pullback. The pullback is going to come like this, right? Now, you can eventually get into a pullback, a buy from the pullback, but you need to understand that this buy from this buy here, it is not a complete bullish structure. We are still bearish. So this whole buy structure is just a pullback. Just like what is happening on Hero JPY now. Some people they are lost in this. I see this as a little move. I mean, they are totally lost in this, seeing this as maybe we are bullish, forgetting that price is still selling. We broke structure to the downside. We have been breaking structure, we have been breaking structure, and we have been breaking structure. So even sometimes I used to take this kind of buy, definitely. So even though what I'm trying to say is, even though I'm going to take a buy from here, I always know when to get out of my trade because this buy here, it is not a bullish structure. It is just a pullback. The bullish structure is going to be confirmed when a range fails. This is it. When we have a push, if this bullish structure I'm talking about is just a pullback, price is going to come and give us a clear manipulation. When that manipulation happens, the new structure is what you want to trade. That new structure is the one giving you confirmation. That new structure is the price intent, is the buy intent, showing that we are now buying. So that new structure is when I want to like take my good trade and hold it. But you see this pullback here, I just want to take it for a short period of time and I know where to get out from because this range is staying intact. We are still having range from year to year. Price is currently at the premium. We are trading from premium. If you understand what I talked about range, I've said it the last time where we had a sweep and break. If this range fail, this is going to be the new range. And if this range fail, then you use the last one. So now, always know when you are having a pullback. The reason why some people get lost in that top-down analysis is because they don't understand the pullbacks. It's because they don't understand when that pullback is happening. I'm sorry. They don't understand when that pullback is happening. They just see every little structure as something to trade from. That structure you are seeing might just be a pullback. So let's move to I was using something before. Okay, let's zero GPY. So top-down analysis. Your top-down analysis should contain it should focus on it should focus. Oh my god. When doing your top-down analysis, number one, you focus on candlestick. I use candlestick a lot. All those doji, engulfing, morning star, evening star, these are things I use. I'm not even going to hide things at all. But these days, you might think that it's not important, but it is important. You focus on structure too as well. To structure liquidity, you don't even need structure, liquidity, then what else? Order flow, and then we are in new mode, right? Okay, I'm coming. Let me check something. There is something okay, that's what we have actually. Okay, I just want to check something. Okay, so this is what I'm talking about. We focus on candlesticks, structure candlesticks first, because it's the candlestick that makes up the structure. Your candlestick is your liquidity. You focus on candlestick, you focus on structure, you focus on liquidity, order flow, days and weeks. Like your previous week high, previous week low, previous day high, previous day low, so on and so forth. So yeah. Let's now move to the chart. We don't really have much to do. So let's now move to the chart. So now, let's now move to the chart. What pair should this? Let's use GPP today. The last time we used euro USD. So today let's use GPP. I didn't even check GPP USD, but just look at this claim, what I'm seeing on this weekly time frame based on candlesticks. Very clean. There was a sell I took on GPP JPY, if I'm not wrong. It's very related to something like this. Let me show it here. Okay, I was even using it. Okay, so I have two tabs open. Now, the whole sell move on GPP JPY, sometimes I just prefer trading a personal account over preference. I mean sometimes. So yeah, this is it. Very good. Now I think, oh my god, I think I posted it on the Telegram channel. I'll still go back to the GBP USD. I think I posted it on the Telegram channel. So look at this. What happened here? We had the first break, we had the second break, and then what is this? Me personally, I don't see that as a break. I see that as a very clean manipulation. We had the second manipulation. So this is my first manipulation, second manipulation. I'm already seeing some kind of, things there. Then finally, we had the last sweep. We sold to the downside. We took out internal. Then I had this. I did actually call I think it was the buy I called for my students, not the sell, because the sell later happened, I think, towards the end of the week. So yeah, so look at it here. We had a demand from here, so we bought, right? Now my expectation here is that from what I've thought, right? Definitely you should understand this, that we took out internal. We are supposed to go for the external, right? From, if you really understand my structure, the teachings of my structure, so that is not a break of structure. That is price moving from internal. So my expectation is for price to go for the external. Now look at it. Look at what happened. We started reacting from here, right? We started reacting from there. Let's go to more lower time frame so that it will be more clearer. Let's go to 1 hour. Now we started reacting from there. What do we have? Definitely there's going to be another reaction because of people trading supply, right? But me, definitely I won't be taking that, because my expectation will still be for price to go and take out what? External, which is that high. So let me draw it out like this. So now we started, there's going to be a reaction from there. So it failed. Now, it failed. What happened? Price took out this high. All the people buying, all the people selling from here I marked out, they were stopped out. So you can see how we started mitigating demand. We mitigated this demand. We even swept liquidity. We swept liquidity and we pushed to the upside. Then we broke above here. We took out the supply and demand in control. Now, what is the expectation? The expectation is still to go and what? To go and take out the external high, right? I don't usually change my bias. I change bias, definitely, but not as easy. I need reasons for me to, I need reasons for me to change my bias. So now we are very close to the external. Now let's see what happens. So what do we have? We still have mitigation of demand. We still have mitigation of demand. We still have a demand here, right? So you can see our price is tapping into it. So what happened? Now look at it. We still refuse to go above the external high. So you can see that when it happened, it was on Thursday, end of the week. We are very close to the end of the week. So what I did is I went back to the weekly time frame. Now, on the weekly time frame, I used to tell you guys, focus on candlestick, focus on candle. Now, look at it. Let me remove this. Look at what happened here. So, this our buy side liquidity we're expecting price to take out. It is actually a previous week high, which is still much more valuable. But I want you to look at where price is coming from. You can see that after price took out this high on the weekly, we tap into the fair value gap from here, though not completely, but we tap into it, right? And that fair value gap, if I am to combine it together, this is actually another block. You see, this, from this first red candlestick, second red candlestick, and the third red candlestick is the other block. This was the last buy leg before this downward move that broke structure. That is what is called other block, because on this weekly, we are seeing it as 3 candlestick, right? Now, let's the money. You are going to see it as a single candlestick. You can see it is a single candlestick, a single order block from the monthly time frame. But from the weekly, it is 3 candlesticks. So it is order block. This was the last buy before the sell. Now, you see what happened when price sold. You can see the momentum to the downside. So the objective of this buy, when I saw it, was actually to come and tap into this gap, which it's aligned perfectly with the order block. So now, price took out this high as the liquidity. We tap into the fair value gap. So now, my expectation was for price to this, which I was still buying from the lower time frame. You remember, I was still buying. But you can see what now happened. Now, when we get to Thursday, right, I took the buy because I was not expecting price to form a swing structure. Last week, a lot to the right, a lot to the left, a middle low, and a low to the right, because it was now on Thursday. So that is why I said, when you're doing your thought analysis, days and weeks is very important. Oh, I've passed the, oh, let me see, cut it out. Oh my God, this is it my network?
Yeah.
Can you still hear me, please?
Yeah.
Please, if you can hear me,
Yes.
just put yes at the chat box. Let me know. You don't have to like. Please, if you can hear me, put yes on the chat box. All right. Thank you very much. Thank you very much. So now let me cut it out completely.
Yes, we can hear you.
So now I was still expecting price to like, I was still expecting price to take other high. But when I went to daily and when I went to the weekly, like I said, I saw where price is coming from. So I saw where price is coming from. I already see that, okay, that high might not be taken out again. And from what I have explained, what have I explained? I've said it that manipulation had the manipulation. Like I said, this is the first manipulation we had. This is the second one. Two sweep. Then we now so this was the internal. My expectation was to come for the external, which is the previous week high, but you know that did not happen. So we started buying. So like I've explained here. So now let's now move to the entry was actually from a lower time frame, like the 50. So look at it here. Look at it. I don't usually I can't get lost on the what on changing my time frame. Some people say they used to get lost, but I see no reason. You focus on the same thing you are focusing on from the higher time frame down to lower time frame. Then if there is any reason for you to like change your focus, don't still forget what you are looking at from the higher time frame. Don't forget it at all. That's why let's say you should learn how to pay attention. So now we broke above this high again. So we still need to break above here. Now I want you to look at what happened. Now, yeah, we now took out this high, didn't break above it. So yeah, we now started selling to the downside. Though the thing there is that there is still a demand here, which price can still buy, right? Which price can still buy to the upside, and that was why I have to like take my first position off from there. Like my first TP off from them. So if you check the time that price came there, it actually came there in the afternoon. See, we still took out internal. See what I had marked out. So mini price came inside of this demand. We took out internal. We're supposed to go for the external. But I want you to, even though you are not able to get in from there, now I want you to look at what is happening. You have to learn to pay attention. Our whole overall reason was that we are moving from internal to external. We started buying internal to external, right? Internal to external. But internal, where should be the external this side? What happened? We didn't take it out. Instead of that, we started selling. We started selling and we broke below the low. Now, let's see. We broke below the low. Now, what has happened? Demand was taken out. This demand here was supposed to push price to take out the external because we took our internal, but we didn't take it out. So we continue selling to the downside. Now, in this kind of scenario now, what will be your expectation? You can see that something is now switching. So this low is now becoming what? A weak low. Why this low did not break the structure? We didn't take out the high. We didn't take out the liquidity. The main objective was to move from that, did not do that. So what was supposed to happen did not happen. What was supposed to happen did not happen. To be honest, if you get to a certain stage, you won't be chasing after price. You won't be chasing, you don't have to chase after price. If I see this kind of structure, even though I'm bearish, some people, when I mean some people, I want to talk, okay, I will just say me, then, right? Because these are things that I'm sure that is happening to many people out there. When if they are not able to get in from there, they are not able to get in from there, they will feel like they have missed the trade. And that is what we now make them to go to 1 minute, to 5 minutes, or even, to 1 minute or 3 minutes and start looking for that entry. If you don't know how to manage, if you don't have that emotional balance to trade such time frame, just stick to your higher time frame. The thing there is that you just have to be patient. What I always say is that price moves in wave, not single line. When you understand this will help you to stay patient. In this thing now, even though I want to sell, for price to come and take out this low, when I started analyzing, yeah, I could remember I told them on the Discord that some of them should analyze, that they should go analyze CPPJP1, they should tell me what they want, what they will do. And then I remember when they went to analyze, a lot of them were trying to buy from here. I could remember. And then that night, somebody now came to me and was like, he saw it on X that somebody posted that the person took this buy. So this buy was, if you check the time, it happened in the night, like in the midnight during nation, like if you check around 11 in the midnight, struck the next day. So now when we woke up the next day, the buy did not even take at the high. I mean, this small two candlestick, a bit 3 candlestick. So probably the person is like a lower time frame trader. The person has taken opportunity of this thing. He has made the money he wants to make. But you, that you are trading the higher time frame, you cannot definitely trade that way. Right? The amount of time you will wait for price to get into your entry. Some of these lower time frame trader, they have taken 1-2 trade and they are out. Take profit or loss, they are out already. So now at the end of the day, when we woke up the next day, I saw that price is not even getting when we started selling. So I told them you are not going to buy from here, right? Because this demand here did not even break, even though you want to buy. If you are not able to get into GPPJPY buy from here or from here, I am not going to buy until I see a break of structure. I told them until price broke above this high before you should buy. And when we went again, this was the place we now went to look for a point of interest from. Now, why this place? The thing is that this is the place where we had the major switch in market structure. When I mean switch, you can see we had a sweep. Price came inside of a demand. Then this is the place we had the first valid break of structure. Look at it. We had a mitigation of a supply. So this supply here was supposed to send price to the downside to take out this low, to take out this protected low. But you can see that this low was not taken out. This supply sent price into a demand. So we started buying from there and we broke above this high. So all of these are internal structure, but this should be the valid liquidity you will choose. And then when the buy started happening, I was like, okay, this buy might just be the pullback because price does not move in straight line. So price may just move like this. We are going to have the pullback and we are coming to take out this low. Why? Because this low is a weak low. This low did not break this high. So this buy that I had marked out for them from here was now push price back here. How will you choose that supply? Look at the place that this demand failed. This demand here that push price. Now, that is the area you want to choose your point of interest from. Right? That is the area you want to choose. You can see that pullback happened. It happened on Friday, right? Stroke the new week, right? And when it comes to the new week, you don't have to rush in. Definitely, you don't have to rush it. Now you can see we took out this. Do you want to sell from? You should pick this area where this demand feel. That is where you should choose your point of interest. And that is the place price sold from. That place where this demand, because this demand is important. The reason is that because sometimes I used to do this survey, right? I'll just tell them, analyze a pair, because I'll just tell them, analyze a pair. 50% we see buy, 50% we see sell. And this is just based on the book I read, right? Still talking about trading. I used to say this, that candlestick represents people's emotion. By the time they send the chart, I have what I want to do before. But it is so funny because at the end of the day, the people that want to buy, they are actually choosing that same point of interest to buy from. Look at when I told them to analyze this. All of them were choosing this, except I think one or two of them was the one that was not looking below, right? Most of them were choosing this. And I was like, you don't choose this. You don't have to take a buy from here. The reason is that this is not valid. This did not even break structure. Even though price respects this, even though price buy from here, if I see this kind of thing, I will not buy from here. You don't trade like this. If you want to take your trade, at least what of your range? Will you just throw out your range? Don't you understand that price is going to pull back? Liquidity has to be taken. Price is going to move from a point of liquidity 1 to another point of liquidity 2. Price will not just continue moving in one line. See, when price sold, the pullback was expected. And we took out some liquidity before we now continue selling. And at the end of the day, if this pullback now happen, you can get into your trade because your range will now be more valid. Your range will now be valid. This is when you use your premium and discount pricing, and you have a range from this last low to this last high. Look at it. This sell is coming from the premium of this and the premium of this, not just from a place. Not just from a random place. Now, why did I come here? I was trying to show something on GBP USD. Look at where GBP USD sold from. Look at it here. In fact, we had a break above here. We had another break above here. Now, what is this? From what I've thought, this is a very clear bearish candle, bearish order block. Look at, we had the first. Why do you think we had 2, 3, 4 sales in a row? I mean, for 4 weeks, we closed bearish throughout those 4 weeks. We had it to the downside before the push. Now, this order block here, when price got there, we tried to buy from there. We tried to buy. In fact, we tapped there the first time, we tapped there the second time, we tapped there the third time, but eventually we failed and we pushed price to the downside. That's the area price came back and it aligned with the fair value gap. Now, aside from it aligned with the fair value gap, what do we have? The swing structure. The first, the high to the left, the middle high, and another high to the right. You can see that price did not trade above the previous week high. And if the sell, I mean, if the sell is going okay, no wonder somebody sent one of these guys on my Discord, very clean sell. He got into the sell. I don't really trade this pair now. And you can see the sell happened on Thursday. Now, that's when he even told me was like, because it's happening on Thursday. So now what is going to happen? We are going to be expecting a swing structure. What do we have? A sweep. Now, we had a mitigation of a demand, of a supply. And then this, we had a low from there. Look at it. We started mitigating demand. When we mitigated the first demand, we didn't break above this high. We mitigated the second demand, we didn't break above the high. We didn't break above the high again. So that was what created an inducement, and we came there, London session on Monday, and we started saying, where is the objective? This low is the objective. Same objective with Euro USD. That low is the objective of price. Now, everything all combined, the order block that failed from the weekly time frame, look at where price is coming from. This bearish order block that failed, it aligned with this fair value gap. That is, and then what happened? This was printed last week, previous week high. Though previous week high was not taken. Sometimes I used to expect previous week high to be taken, but you can see how everything happened. This is price selling from a fair value gap. Fair value gap, they are very powerful and wonderful point of interest you can take. You can take a trade from. Just watch and try to understand the reaction happening from inside of it. I said it out. A point of interest is not only limited to supply and demand. Your fair value gap, your breaker block, a supply that failed is become a breaker block. I think that is where Nasondra bought from yesterday, a breaker block, and it's aligned with a fair value gap. I always like my point of interest to align with, I mean, to align with one or two things, like a supply align with a breaker block, or a breaker block that align with a fair value gap, something like that. So, because the thing there is that nothing is random. Like, I mean, something will come, a point of interest will come from something. Okay, look at it here. This is a supply from here. We can see that, yeah, what happened here? Like manipulation, a zone of resistance was taken. That was a manipulation that happened. And then this place here, it is a supply, right? You see it as price coming from a supply. But the truth there is that if you check it very well, this supply here actually align with this last supply field. The reason is that there is a supply there that some people are trying to use this as an inducement, and they are trying to sell from there like this. Right? They are trying to do something like this. So price manipulated it and we sold. When price came back, this supply here, there was a bit of reaction from there. We had a sweep and we had a break. So price came back into it again. So this supply aligned with this one that failed from there. When you want to choose a very like a point of interest that will be much more that price we likely respect, always let it align with something, right? I mean, when you choose a point of interest from here, when you let me say you are choosing the supply from here, try to look at that supply, that rejection that led to that supply. What led to it? What caused it? I mean, go back to somewhere here and try to look at how it is. Look at it here. We had a supply, pushed price to the downside. We pushed up. Price was trying to sell. See those candlestick. Price was still trying to sell from there. Then we failed. It became a demand. See how we tap into it. This is daily time frame. We took out the previous daily candlestick, we tap into it and we continue buying before we started selling to the downside. That this is a break of structure. Why did that reaction happen? This one here, because price was trying to buy from this demand. So now, let's continue. Let's continue what I was trying to say. Now, you don't want to get lost. Where should we? This is daily time frame. So let me just use a random. Let me just use I don't want to really go far. Let's use something recent. Let's use something recent. Let's use like this bullish to bearish. Now you don't want to like get what as I was saying, you don't want to get lost. You don't want to get lost doing your top-down analysis, right? Now let's do a top-down analysis on GBP USD. So before the end of the session, time is fast spent already. So now should we start from the daily? No, let's start from the weekly. Let's start from the weekly. Okay. All right. Very good. So let's start from the weekly. So bad. All right. So now this is the weekly time frame. So let's assume that you are in a new week and then you want to trade GBP USD. You want to trade, who is that? Maxwell. Ah. Please remove those things. Okay. You are in a new week. You want to trade. You want to do a top-down analysis on GBP USD, and then you want to start from the weekly time frame. Right? Now, the first thing I usually look at for them is Maxwell.
This part is the bottom. Now, why is this guy doing like this?
I'm sorry about that. All right, so you want to trade you don't have to squeeze your chart like there's something I used to say. most of you here are a day trader or a swing trader. Because I'm not sure that there's any position trader is when you will trade for. Some people can trade for 1 year. So most of you here are a day trader, you will trade for 1 or 2, 3 days, and or swing trader where you get to go trade for 1 month, or some few weeks, or some few months. So I used to tell this that you don't have to squeeze this and then like breakfast structure, liquidity. Like, when do you expect price to come and do all of these things? Like, it's going to take a lot of time. So when you want to analyze your chart, you zoom out. You are dealing with candlestick. I like to see my candlestick. I don't like to do this. Even on the lower time frames, I don't like to do this. I want to zoom out and I want to see what is happening to price. So that is how I want to trade. Right now, look at it from the weekly time frame. So the first thing I'm seeing here is that price took at this high and we are coming from here. Though the initial plan is that since we have taken out the internal range liquidity and we are coming from this demand, what is going to be the initial plan is to come for the external. Always remember that. Now, when price now is very close, it's just like what I explained on GBPJPY. Price is close to the external and price is now doing something else. This is already showing us that there is something that price wants to do. Let me see if this thing I'm doing can take me down to 15-minute time frame. Can it? Okay, it can. Actually, it can. Can it? Today is what? August.
December.
Sorry. Let's go for 5 minutes. Okay, it can. Yeah, it can. It can. It can. Yeah. I just want to be sure. All right. So now, when price is close to your external high, then price started showing you something else. So this is already telling us that there is something that price wants to do. Right? There is something that price wants to do. So you, in this kind of case now, the structure there is that price is going for the external. Plus, but instead of price to go for the, we did not go for the external. So this is already showing me that there is higher probability of price selling. Now, the thing there is that look at this structure now. You zoom out your chart. You want to understand the candlestick. You want to understand the interaction. This was a beautiful reversal from here. We had this, tap into this. We started pushing price to the upside. Now we started pushing back. What I used to tell you guys, you trade like this. We expect price to take this, and we go for this. So look at it. We have same thing here. We had a push. We had the first pullback. Now we had the second pullback, and we had this. So I'm expecting price to take out one of them. Then we buy. Right? That's going to be the thing. But now, looking at it here, the first, when price started selling, yeah, on Monday, last week, the first week, bearish candlestick, inverse AMA. You know what I mean? The second week, bearish candlestick. The third week, bearish candlestick. But with what? AMA, rejection. We are rejecting from something. We are rejecting. Look at what we are rejecting from. Order block. This was the last sell leg before this buy. Look at the bullish. Look at how these two bullish candlestick engulf all of this. How many? About 5 of them. It engulfed just 2 candlesticks. 1, 2, 3, 4, 5, 6. Engulf all of them. The first week, we had the first rejection, right? The second week, we had another rejection. So this is already showing us that there is something there that price is trying to do. Right? So now, what is going to be the expectation? What is going to be the expectation? Look at it here. First week, first rejection. Second week, second rejection. So though the thing there is that we're expecting price to take out this low before we buy as the internal range liquidity. That's going to be our expectation. But yeah, we started pushing price. Even though we are closing bearish, yeah, we pushed another price to the upside. Now, let's go to lower time frame. A new week, what is going to be your expectation? To be honest, my expectation is still for price to come and take this, except I see something else. So my expectation is as a sell-side liquidity, right? That's a sell-side liquidity from there. Now, let's now move to what is going to happen next. We continue selling to the downside. Let's go to let's go back to 4-hour daily. So what is going to be, you see, I am not still lost by what I'm expecting. I am not lost. There is no way I will be lost here. Now, yeah, we have other things that can continue pushing price to the downside. Example is, look at this place here. What do we have? A supply. There was a reaction from a supply, which we failed. Supply became a demand. There was a reaction from the demand. We failed. You can see how price retested that demand. Look at this candlestick. Let me zoom out very well. Look at this candlestick. We pushed price back inside of this. Then we continue selling to the downside. So we have this from here. I have that as a high from there. Then we started pushing price to the downside. So my expectation is still for price to take this out, and then there is possibility of price coming inside of this candlestick. Well, price has, okay, this is Wednesday, okay? So this candlestick here, you can see that after this mitigation happened from this red bearish candlestick, this is the next bearish candlestick we have, which is another block, bullish candlestick, sorry, another block. So now there's going to be a reaction from there. That is the area where this demand failed, where the supply failed, right? So those candlesticks are very important. Now, let's now move to the weekly 4-hour time frame. 4-hour time frame, I had that marked out already, where I am expecting price to, I want to trade, but that doesn't mean, the thing there is that you don't necessarily have to you don't necessarily have to engage into a trade on Monday. When you understand that, you will understand that you don't have to force so many things, right? Now, Monday, from what I've talked about time and price, you should understand what Monday is all about. Mondays, you wait for Monday high to be printed, then Tuesday for manipulation, then Wednesday for continuation of whatever trade you want to take. Right? So now let's continue from the 4-hour time frame. So Monday, we are going to see what happened. You still don't want to get lost, right? You don't want to get lost by that. Now, we are expecting price to take this out. So this is a new week already. What day is this? This is Wednesday, actually. So that's Wednesday. This is the place I'm talking about. But the thing there is that I know that if you want to refine, you might want to refine to this, right? This candlestick as the last supply. Okay, you might want to mark this as a break to the downside, right? Good and fine. You are not wrong. But this is Wednesday. This is Wednesday. You see that supply that I marked out, right? There are a lot of people seeing this. This is so obvious. Very obvious. Now, look at the way price has been selling. Look at this sideways move. Look at this sideways move. I see this. I see this as a single leg. I need a proper pullback that is going to clear a very good liquidity zone. A proper pullback that is going to clear. In fact, the pullback, I can even expect the pullback to last long to this extreme. Because looking at it here, there is nothing left for me for price to mitigate. I always talk about mitigation. Everything here has been mitigated. We have mitigated this. We mitigated this. Look at how we now mitigated this. Then became this. Became this. We tap into this. This is the last point unmitigated. Now look at it. We had a very clean trend line from there. This is Wednesday. This low is going to be Tuesday low, previous day low. Tuesday low, previous day low. From here, I will expect that manipulation to happen. I will expect price to take it out. All right, now good and fine. Price took it out. This place here, a lot of people will be selling from there. Number one, the smart money trader. What are they saying? They are saying break of structure, inducement, and supply. Number two, the trend line trader. What is this? A very clean trend line. Trend line is just not just one line. You can see we had the first touch, second touch, third touch, fourth, fifth, sixth, seventh trend line traders. Number three, even the this is not really a clear support storm resistant thing, but I'm sure that the trend line traders are going to be trying to take a step from there. Trend line liquidity should be your target, not your entry. So where are you going to be taking the sell from? You want to take the sell from maybe from here, right? Because this low was printed on Wednesday, you'll be expecting this low to become low of the week. It was printed on Thursday, you'll be expecting the low to become low of the week. So we are going to sell from there. Definitely there's going to be a reaction from there. So we give that reaction, allow it to fail. Now, very good. It failed. It failed, leading to what? A break of structure to the upside. This supply failed. What did I say? We are expecting the number one place liquidity I'll be expecting price to take out is this. This high. Why? Everything inside of here has been mitigated. Nothing. Now, you can see that this is my sell side I was expecting price to come and take out, right? You can see that from what is currently happening now, price is bullish. Like maybe price is trying to buy to the upside. Price is bullish. So let's go to like 1 hour time frame so that we can choose a very good point of interest from there. Even though you don't have to go to, let's go to 4 hour time frame. Now, this supply field, demand got in control. So we had the first bearish candlestick. We tap into it. Now we have fair value gaps. You can see our price broke that high with fair value gap. We broke structure to the upside. So I'll be expecting somewhere here for price to come to somewhere here. So for me to take that buy, I need that inducement. So I need an inducement. In this kind of scenario, I won't take it. Now, oh, that was really fast. I need an inducement. See how price printed an inducement, I'll tap into it. My first place is going to be here. Then I might be expecting some kind of reaction from here. I told you guys, I don't trade extreme. I don't trade extreme. Everything from here has been tapped into. Now, you might be wondering, eventually, if price wants to continue selling, if price might still, how will I know if price is coming for this sell side, this low here? You will know. Now, the thing there is that I will not do something like this. I will not go and be doing something like this. You are trading against the trend. Instead, allow price to come. You don't have to rack your brain on where the supply price is going to sell from. No, allow price to tap into it. That new structure is what you want to trade from. Look at it here. When I was trying to buy, did I buy from here? Did I buy from here? Did I go and do something like this? I did not go and do something like this and try to buy. The new structure, this new one, is where I'm trading from. This new structure is where you want to sell from if price is going to sell. And aside from that, this leg here, you can clearly see that we did not break structure. We didn't break below this low. This low broke below the high, but this leg did not break it. So all the supply from here, from them might not be valid. The only time a supply will be valid is when price tap into a supply and we started giving a new structure, breaking it to the downside. That is where you want to sell from. Now, I will just expect the pie to continue to the up. Let me quickly show that same trade, but it is on GBP JPY. I traded JPY pair a lot of time, but so look at it here. We had a break above this high. We didn't take out this low, but we started buying from here. Now from here, we swept liquidity. From there, we swept liquidity. We tap into this, and then we broke structure to the upside. Sorry. Now, there was a supply from here, right? There was a supply from here. Now, what do you expect? Okay. What do you expect? We're expecting a break of structure, right? Look at we're expecting a break of structure. There is nothing there for me to do for now. Now, there's nothing there for me to do. Now, we broke above the high. and then we printed an inducement. Look at here, where this supply failed, there was a demand here. Inducement was printed. So now, when I am trying to buy, but I am buying based on this new structure that price is printing. The buy from here, I am not comfortable to buy from here the first time. The reason is that when price took out this high, I don't see it as a break of structure. You can see, I saw it as a liquidity sweep. So my expectation is that we are coming to take out this low. In fact, my overall, I remember telling them on Discord that my overall expectation is for price to come and clear the zone of support. That was my whole overall expectation. So the expectation was that we are going to sell for price to come and clear the support. But now we started buying from here. We swept liquidity, we pushed. A supply failed. We push again, then we broke above this high. This high that I was expecting it to be protected. I was expecting this high to be protected to come and take out this low. We broke above it. So we printed an inducement. Now, that is where I bought from. This just one single, this trade happened on Tuesday, right? The last, before I finally take this trade, the last trade I took on GBPJPY was, I think, I can't even remember, it was like 2 weeks, I can't even remember, right? Like, it was very long, like, I didn't really trade it that much, but when I saw this, I was able to take this, buy from here, but with this single buy from here, it is about, I can't remember, but it gave 8%. That is, I even got out on time because I set my TP at the percentage I need it to pass that profit. One single trade, I was able to pass the profit with just one single move from this low to somewhere here. I didn't even get out of it. I got here somewhere here. So that is to show you why you need to be patient. Now look at this GBPJP. Some people might be rushing to get into the buy from here. Why can't you wait for that thing you are expecting it? Why can't you wait for it to print? Look at the buyer. It's to come and clear out this trend line liquidity. Yeah, I know when I saw this trend line, I remember that if you go to my Telegram channel, look at the time that this happened. It happened August 8th, 2004. That was when it happened. August 8th, 2004. So if you are going to go to the images like photos in August, November, October, September, August, right? If you go to the images in August, you will see that, let me copy the image. I just, when I saw it, because I wanted to do it randomly, but when I saw it, and I remember that, is this GBP USD? Oh, that's US30, sorry. Okay, yeah. Now, and I remember that I was trying to take the buy, but I was not tagging. I think that was what happened. Yeah. It was, the buy that I was tagging was US30, right? It was US30, so GBP USD. Yeah, you can go to the Telegram channel. I was trying to take the buy, but I was not tagging. Yeah. So I think I was still trading US GBP as of this August. So now that, like this, if I see these charts even on another pair, this is the way I will see the market over and over again. I will not try to trade against the trend. I will not try to trade against the trend at all. Now, okay, we are the extreme. Okay, we took it out, right? We even took it out. Expectation was price to take this, we didn't take it, so we took out the high. Look at what I'm now. We started moving in that sideways move. Now, what will you be expecting? No matter how price move this way, even though you are trading only GBP USD, expect a reversal. Expect a reversal for price to come and take out one of the low. You see, just mark them out. Just mark, price is going to come and take them out. Price will not just continue buying and buying and buying and buying and buying like that. Price does not work that way. Price has to take out liquidity from one liquidity to another liquidity. So price needs to come and take out one of the low. And then now this one, I need price to take this low out. So or this high, one of them. Let's see the one that price is going to come and take out. Okay, you mitigated the extreme, then eventually we take it out. Now, how will you buy? Don't do this. Don't do this. I'm teaching you how I trade, and I'm going to tell you I don't do this. If I want to buy, how will I buy? The new structure. The new structure will give you an entry. I always say this, right? And somebody was even asking me, a friend, I was telling the president, see, if GBP, USD, any pair, if he's going to buy, if we are going to move from this, like this low, now, if we are really going to move from year to year, I will get an entry. Another thing is you trying to determine price direction. Another thing is you trying to get an entry. If I understand price direction and it is set to that, yes, price is moving to the upside. The thing I'll now be focusing on is what? Entry. I will get an entry. Like, if price is really going to buy, just be confident. Like, don't try to cloud your mind that because you missed the buy from here, you have missed the whole thing. Absolutely no. We still have a long way to go. Price can continue buying and be buying and be buying. You will still get an entry. Look at it. We took out these two lows, right? All the internal range I talked about, we took it out. Now look at where price is coming from. Where are we coming from? Breaker block. What did I say about the supply? Extreme. I'm telling you, thousands of people are stopped that from trying to sell from here. A lot of people are trying to sell, and I'm very sure about it. They were stopped that. It becomes a breaker block. We tap into it. And not only that, we have taken out internal rate liquidity. The first one, we took out the second one. Now, we came from this supply. You can see that this supply, this sell from here, did not break structure to the downside. Don't go and do this. Now, the thing there, I used to, even though price is going to sell from here, two things. Is either price engineer a liquidity and you sell, or you wait for price to tap into it and wait for that new structure before you sell. It is the new structure that will indicate that this is now a weak low. If the new structure is not given, price is going to protect this low, and this low is going to lead to break of structure. Make your rule to be specific. When you want to do something on the chart, be specific on what you want to do. It's kind of thing now. Two things. My expectation is that I will wait for price to come and tap here. Then I will wait for something like this. Now, if that did not happen, because a lot of people are going to be seeing this as a break of structure to the downside, and what will they be seeing? They want to take a confirmation sell from here, and they will be trying to sell from there. And yeah, as a smart money trader that I've always taught you guys, what will you see here? This is you seeing internal to external. This is not a break of structure. That is not a break of structure. That area of supply, that area, in fact, most time when I want to take most of my trade, that area of supply is where you want to get it, because that is where a lot of reactions is going to be happening. So let's wait for price to get there. I've stopped trading GBP USD as of this time. I've stopped. I can't even remember all of this price action. Now, let's wait. Okay, we have tapped there. Okay, very good. You can see we had internal range liquidity. So what we have a fair value gap. Let's see if price is going to come back there. But the thing there is that where this fair value gap is, I don't like it. It is not extreme. We are the extreme now, but let's see what price is going to do. Now we have tapped there. Now, order block. This is order block. This was the last sell before the buy. So like there's going to be a reaction even though it's going to fail. So okay, now we push to the upside. Now we broke above here. We are still expecting price to come for the external high. Now what is currently happening? I'm already seeing that as a zone of support, a lot of reaction are now playing from there. Very good liquidity to target. Now very good liquidity to target. So I'm sorry. So what is going to happen is that I will still continue following price. Oh, I'm even using 4-hour time frame. We took out the external high. All right, we are still bullish. So we took out the external high. We are still bullish. You can see how we move from what? Internal to external. Internal to external. You know, people trying to sell from here. Supply, you can see demand got in control. That is just what happened from there. So demand got in control. Now, let's continue. We wait for inducement. Now, this is an inducement. Let's go to lower. Okay, we are used for our. Let's go to lower time frame and look for something. Now, let's remove this. We understood that that is an high that has been taken from there. And then what else? We tapped into here. We tap into here. We took out this low. This is now look at this place here now. Yeah, this place is very interesting. The people from here. Let me cut it back again so that you see what I'm saying. Let me cut it again. You can see that we had a reaction from the extreme. We had a reaction from the extreme before it was taken out. Then we came back inside of here. So we swept liquidity, right? We swept liquidity. So we are coming from the. So the reason is why I'm showing you is that place there, there's going to be a kind of continuation from there. I mean, there's going to be like a demand for price to continue, like another block. So this candlestick here, tweezer bottom, bullish and bearish candlestick together, something like that. I want to we expect price to possibly tap there before we continue the battle to the upside. But in case we did not come back there, let's see what is going to happen. Okay, we still did not come back there. We broke above this high. Let's wait for an inducement. All right, now let's go to lower time frame. Looking for an entry, let's look at the days, the time we need to. Before I will take a trade from here, this is me trying to trade continuation. Now, this low was printed on Friday. Previous Friday low, right? Friday low. That low was printed on Friday. So meaning we are expecting price to come. This is a new week. So I'll be expecting that low to be taken. And then looking at it from here, you might see this as internal range liquidity. Internal range liquidity. These are sweep. These are sweep. We still have this as our external high. That is previous week high. Two internal range liquidity. We need price to take out one of them. Then we continue the buy to the upside. Now, out of those two, this first one, it's tap into here like this. Then we have another block from here like this. We have an inducement already. This is an inducement. So this is the other block from there. I will expect price to manipulate it in the new week because now this is going to be the new week, right? Now, okay, price now came there Monday, London. Let's see. Okay, price actually bought Monday, London session. All right, now Monday, London session, continue buying. Let's see what's going to happen on Tuesday, then stroke Wednesday, and so on like that. But from what I have explained now, this was a very good entry. Price did not get back into this place we are talking about. Price did not get back into a lot of place I was looking to buy from, except for this last one. Now, you can see why you need to understand your structure. You can keep on following price like this. Now, if price continue doing like this will be your protected low for now because we move from internal to external. Now, we expect there's going to be like a point of interest from here, a point of interest from here. If price prints an inducement, you're going to expect that same thing, internal to external. That's what you'll be expecting. And if that zone fail, then you know that price is trying to switch to the downside because price will not continue buying like this forever. Price has been buying like this. Probably there is something that price is trying to do from the higher time frame. You don't get lost from what you are looking at from the lower time frame. You don't get lost. Look at this GPPJPY now. The whole overall bias for all the buy might just be to take out this high. Yeah, like this. Might just be to take out the high. And if price eventually takes out the high, we can sell to the downside. So if you're having that bias that price is going to sell from here, then why will you get lost when you go to lower time frame? I see no reason why you should get lost as of that time when you go to lower time frame. So what did I want to say? Sunday is going to be an amazing session. So I'm going to make sure I